the global economy is on the brink of transformative shift, with a push for a global minimum tax gaining momentum worldwide, aimed at ensuring multinational corporations pay their fair share. This OECD-led initiative could impact tax revenues, business competitiveness, and global cooperation. Here in the Philippines, the debate continues over whether adopting this policy will strengthen our fiscal position or threaten our investment climate. Joining us today on Follow the Money is Mon Abrea, CEO of the Asian consulting group known as the Tax Whiz of the Philippines. He's been a staunch advocate for tax reform and transparency, and his expertise will help us dissect the implications of the global minimum tax on the Philippines. Mon, welcome to Follow the Money, and thank you so much for joining us.
Yes, direct from the airport.
We appreciate you making it straight from Madrid.
Yeah, thank you very much.
Yeah, so of course, the news today in the past 24 hours has been that President Trump, not even there for 2 weeks, back in the White House, has already said, I'm not for global minimum tax.
It's not a surprise. I think he's withdrawing from a lot of international cooperations or agreements with the Paris Agreement, with the World Health Organization, and now with OECD.
But let's go back to the basics first. What is this global minimum tax, and why do you think the Philippines should be adopting it?
Well, honestly, it's high time that we focus on the large multinational corporations or the companies that really make billions of pesos or even trillions in dollars. So it will address the base erosion and profit shifting, where they conveniently shift their profits in low tax jurisdictions or tax havens. As we all know, Cayman Island, Bahamas, British Virgin Islands, where they don't practically pay taxes, but they don't operate there, except that their money, their profits are being reported there.
Right.
So they don't pay taxes.
Right. So this means that this particular tax move by the OECD, this agreement, actually affects only the global multinationals. Is that it?
Yes, those with global annual global revenues above 750 million euros, or in the Philippines, it's roughly 45 billion pesos.
Right. And do we know how much of Philippine companies might be affected by the global minimum
There
tax?
are a few, but of course, we know already Jollibee, Universal Robina, I mean, the top ones, the SM Investment Corporation, International Container Terminal Services, San Miguel Corporation, and some more, but not so much.
Have you been able to get any input from them as to whether they are for or against global minimum tax?
Not really, but honestly, whether they are for or not, I don't think it will matter because there are 147 signatories. And going back to your point, question whether Philippines should adopt it or not, it's more of gain for us. It's an opportunity cost if we ignore it, because it's an opportunity to actually improve our fiscal situation, because it will give us more revenues. Imagine collecting the top-up tax, more taxes from these multinational corporations, rather than allowing it to be shifted away. And God knows that it's no longer collected. So this time, including Facebook, Amazon, Google, all those who have for years shifted their revenues and not paying taxes at all, especially in the Philippines. Remember, Congressman Salceda mentioned that just alone during the pandemic, how much billions of pesos they have earned in the Philippines alone because of e-commerce, online shopping, and everything. But not a single peso was paid to the Philippine government.
But so this is the incoming benefit to the Philippines from the global minimum tax. But when you have a Trump saying, okay, I'm not going to participate in that particular agreement with the OECD, what does that mean for American companies then?
It's actually more harm for the American companies, because they end up paying more, paying to the U.S. government, and at the same time being run after by the 140 signatories, or now 146 U.S. out of the list. So yeah, you cannot, Trump can control whatever happens in his jurisdiction, but outside the U.S. territories, he has no control. So the 146 countries can still collect, and it will now be more beneficial for them because they will collect the top-up tax.
And you and a senator are working on making sure that the Philippines will be compliant with global minimum tax.
Yes, because Rain, number one, we're a signatory. Number two, there's more benefit because of the data sharing. We don't need to second guess how much Facebook is earning or how much global multinational companies earning, because OECD will help facilitate the data sharing and the simultaneous assessment and investigation of all these companies. So that's so much potential for us. And we're working with Senator Win Gatchalian, the chair of the Senate Ways and Means Committee, and of course with the OECD. The commitment of OECD is the same with the Vietnam, Thailand, Indonesia, who are already implementing it. So we're already lagging behind RAIN. So there's urgency that we expedite the adoption of OECD global minimum tax.
What does it cost to delay implementing the global minimum tax here in the Philippines?
Obviously, we will not be able to collect these potential revenues. The total is around $220 billion. We don't know yet for the Philippines how much of that how much is the slice of our pie in the 220 billion. But what I was saying is at least 1% of that can definitely help per year, can definitely improve government services and enough funding, especially for social services.
And how does this align with our existing laws, like create more, the goal of making the Philippines more investment friendly?
Just to clear the doubts, it will not lessen our competitiveness. Obviously, because Vietnam and the rest of our ASEAN neighbor countries have adopted and implemented the OECD global minimum tax. Number two, it focuses on large multinational corporations with more than 750 million euros in terms of their global annual revenues. Therefore, the rest will not be affected. And the third is, it's still a discretion of the country or the government whether to collect the top-up tax or not. If you don't collect it, then the headquarter country or where the headquarter is located will be the one to benefit from the global minimum tax. So whether you do anything, you do nothing, if you choose to do nothing, then another country will benefit. So while we are not adopting it, then other countries will be benefiting from the supposedly potential revenue for the Philippines.
Which brings us to incentives and PEZA. Of course, if you are trying to attract certain companies to locate here in the Philippines, would this be one of the incentives that you could dangle in front of them? But for how long? It can't be forever.
Exactly. In fact, OECD is trying to address that race to the bottom, wherein countries are literally giving away their tax or tax holidays, not charging taxes just to attract foreign investments. But at the end of the day, it should be the ease of doing business, the business climate, the transparency that there is no corruption and that really there's less cost in terms of doing business in your country. That should be our offer to our foreign investors, not just tax holiday. It will still be there.
Yeah.
We're not removing it. It will still be there.
So when it comes to the Philippines, Philippine businesses, again, it's the multinationals that will be affected, not the MSMEs. So in their recording, in their reporting of their taxes and their financial statements, how should they be preparing for the global minimum tax?
In fact, that's the reason, that's one of the challenges, because the first reign is the Bureau of Internal Revenue, that they should be prepared in terms of the IT infrastructure and the technical assistance of OECD is there so that they can assist the multinational companies. We need to make sure that our tax agency will also be prepared once we adopt and implement the global minimum tax.
$220 billion per year, and a slice of that could be for the Philippines, and of course, enough incentive for us to be able to work on global minimum tax, and hopefully that passes at the soonest possible time. Now we go to our special segment. We would like to ask our guest a personal, very personal, off the cuff and real life follow the money question. Now, Mon, we know that you're smart with your money. You are a tax whiz. And you're a tax whiz for a lot of companies all over the world. We want to ask you, let's be honest, and everybody's got that one thing that they cannot say no to. So for a question for you is, what's the one thing that you don't mind splurging money on, no matter what the cost is?
Honestly, if I'm with my family, because I live in the US, so every time I'm here, and I'm here now, so my first weekend will always be with my family, so I don't set a budget. Whatever they want, wherever they want to eat, or whatever they want to buy, I give it to them, especially for my mom.
Oh, okay. Well, when it comes to the mom, there's no price high enough.
If that is for the wife, I'm still single, it's for my mom. So whatever she wants, we don't even look at the price tag.
Absolutely, definitely anything for our
I hope
parents.
my mom is not watching.
And we'll send this clip to her for sure. Thank you so much for that. And if you like this episode, we want you to join the conversation, answer our question, share them with us on social media, X, Facebook, and YouTube. #follow the money, and we shall post some of those answers on our next episode. Again, thank you so much, Mon Abrea, CEO of Asian Consulting Group, for shedding light on this critical issue. We appreciate you being here straight from the airport. Thank you. Now, the global minimum tax presents both opportunities for increased revenue and challenges for maintaining the Philippines' competitiveness in attracting investments. Now, balancing these priorities will be key to crafting a sustainable tax policy.